1%, the richest 1% pays about 50% of federal income tax. The richest 20%, about 87%. However, this is more important. The richest 40% pay more than 100%. Why? Because the lowest incomes don't pay any taxes, actually receive more than they pay. Let's talk about corporates. Corporates pay an average effective tax rate which is higher than the average of the OECD in general. So not only the US corporates have one of the highest corporate taxes in the world, but also the effective tax rate is also higher, particularly in the US. So let's see what the trick is. The trick is the following. We have in the US about 600 billion of deficit, okay? So they say we're going to raise taxes on the rich and we're going to get about 200 to 300 billion in extra revenues. First, the deficit is not cut. Second, let's talk about this. This 200 to 300 billion of added revenues doesn't happen. So what happens is that the deficit soars above 600 billion a year, the debt soars above the current level, and taxes are raised to everyone, which is what happened. If we look at what happened in the past 8 years, 1.5 trillion of new taxes to add 10 trillion of debt to the US economy. So we need to be extremely aware, because all this fallacy is based on the fact that these estimates of revenues never happen. And once they don't happen, the deficit and debt problem is always solved by raising taxes to everyone. That's why the tax reform that needs to happen in the US is not only to lower taxes to the middle class and to corporates, but also cut spending. Because in any other formula, debt and deficits will soar. Thank you very much.